Hi, this is Zach May with the Bulletin Board Heroes here at Zach's Traders Cafe for Tuesday, the 19th of September. Starting off with the FTSE 100, we're still in this rising red trend channel there. We managed to break above the 200-day line and break the February resistance line there at 76.30. Low today 76.43, which is all nice. Above that 200-day line, looking for 77.80, which is that May resistance line projection. But obviously the big picture here would be back towards 8,000, especially if we can hold above that 200-day line. Market come off the overbought area. We're at 70 plus. We haven't been overbought since the start of the year, so maybe there is an indication there of strength in the market. Moving on to the DAX, which has had its own issues, struggling near the floor of that rising December trend channel and above a rising 200-day moving average there at 15,500. We want to see that little range give way to a breakout through the 50-day line, 15,900, and then take us back up to the highs of the year, 16,500, hopefully by the end of next month, and ideally a bit sooner than that. On the downside, if we do break back below that 200-day moving average, there's a risk of 15,100 at a May support line projection, but so far we look to be holding up. On to the Dow, and the Dow, similar position to the DAX, so managed to recover from Friday's little blip to the downside. Bit of mini support there, 34,500, but the main line there from October, 34,400, and then the old June-July support, 33,700 there, to hopefully rescue any break to the downside. But it has to be remembered that we do have a double-shouldered head and shoulder formation on the daily chart from back in June, so still the risk of a breakdown, even though it may only be to the 200-day line, while we hold below that right shoulder at 35,000. Moving on to Bitcoin, and here you can see that making decent attempts at breaking back and reversing the post-July sell-off. We've got bullish divergence there in the RSI window, bear trap below 25,000 for the middle of September, and looking for this market to basically get back above 28,000. That would clear the 50, 200 and the July resistance line there at 28,100. So it's basically all on that really to break that area. On the downside, ideally we stay above 26,000 now, which is an uptrend line there from back in January. RSI at 56 with a little bounce off neutral 50, so that is also encouraging, suggesting that we may finally be heading back up again in a meaningful way. Just wanted to look at gold today as well. We've had a little bear trap below the 200-day moving average there for the start of the week. Lovely hammer candle there, and a hammer just resting on that 200-day line around 1930. Above that, looking to break a line of resistance from May around 1960 to take us then back up to $2,000 plus. But obviously, $2,000 plus has been a bit of a problem area for gold over the recent past. Onto the stocks, and good news from quite a few companies, especially in the biotech space. We had the rug pull yesterday for Avacta, but still above the rising 50-day line and above the rising 50-day line. We're looking for a break of this effectively V-shaped bull flag and the 200-day moving average at 120 to take us up to £1.33, hopefully as soon as the end of this month. £1.33, the top of that rising trend channel from back in May. Not expecting any sustained price action now, back below 110, which was the old August peak. Onto a stock which has come up with a wonderful RNS today. Billington, the stock already in a rising trend channel anyway, and you'll see that the turnaround there came with a gap to the upside, and that happened in December. We've never been below the top of that gap at £2.65, and we've got another gap higher now. The view now is that above the floor of that October rising trend channel at 340, we're looking up to as high as £5.50, hopefully by the end of the year or even sooner. But the message there of a stock which is in good technical shape and good fundamental shape, backed by an uptrend line in the RSI window. On to Cobra, which has had a couple of good RNSs both this week and last week. Hopefully the shares will be able to hold recent support there at around the 1.1 pence level. I suppose there is a risk of a further move to the downside, maybe towards the 1 penny area, but so far hoping that that will be the limit given the good news regarding the REE that the company is sitting on. Upside initially up to 1.35 and the 200-day moving average while we're above a penny on Cobra. On to Sizzle, which is making good progress as well, if the RNS today is anything to be judged by. Here we've had a bounce off this falling support line there from back in June. The level there around 1 3/4 pence, and above that looking for a return to the 200-day moving average area at 2.3 pence over the next 4 to 6 weeks. So hopefully Sizzle can deliver. G4 Music is next, and we're covering this stock on the break of, well, it's actually after it hit that initial target there, £1.20. Above 120 we were looking for £1.60, which now is not too far away. The peak today 147, so hopefully we'll hit 160 as soon as the end of this month. You can also see that the 50 and 200-day moving average is about a day or two away from a golden cross, and the run up to a golden cross, as you can see, has been the strongest part in the cycle there. So hopefully £1.60 might even be the minimum on the upside for Gear 4 Music, as long as we remain above the initial September peak at £1.32. Good Energy is next, and here unfilled gap to the upside. We've got a rising 50-day line now, a bullish divergence line as well. So the view now is that while we're above £1.90 and the July neckline resistance, we're looking for as high as £2.55 by the end of next month. And hopefully we might even see that sooner, given the way that both the 50 and 200-day lines are rising and going into a golden cross, hopefully by the end of next month, or during next month, in fact. On to Hemogenics, which hit our target yesterday, but now it's gone through that 2.6 pence level. Looking for the shares quite simply to fill the gap there from back in January at 3 pence, and after that, hopefully by the end of the year or sooner, go back to 4 pence. Which is where they were at the beginning of the year. 50 and 200-day lines both rising, so we're into a potential golden cross, which hopefully will happen sometime early next month. Itsarm is next, and here you can see that shares are gingerly heading to the upside, rising above or consolidating above a rising 50-day line. They haven't touched that line actually since back in July, so pretty impressive stuff there. That's why we're pretty confident we'll hit at least 3.1 pence by the end of next month, and maybe up to the top of the triangle there at 3.8 pence as well. So looking very well poised there, while we're above the 50-day line at 1.65. So reasonable risk reward there on that situation too. Jadestone is next, and here you can see that we've had a bounce off the old resistance line there from June. That's now support at 32 pence. Initial target here 40 pence, had a July resistance line projection, and then hopefully by the end of next month up to 53 pence, which is the top of a triangle there from back at the end of May, and also near to the 200-day line, which will be near that level by the end of next month too. On to Northcoders, where there has been quite a pie in the face for people looking at candles and hoping that the candles are going to suggest something. We had great price action going into today's profits warning. We were looking for up to £2. Obviously now we may not be looking for that for quite some time. What's interesting now though is that with the profits warning out of the way and the shares already having fallen, this may be a potential opportunity. The RSI now higher than it was before the announcement today, so maybe there were a few people who like catching falling knives who might be interested in that situation. On to Orca, and good news still pumping through as far as the share price is concerned. Sort of a last-minute reprieve for the bulls with this situation. Initial target here again, that resistance line there, that's around the 10 pence level, which is what we were calling the stock up to. And what we could see, if we can break above 10 pence, is a fresh target, which would be along the lines of what I'm drawing at the moment, maybe up to 13 or 14 pence by the end of next month. If we can hold above the 200-day line, that's currently at 8 pence. So above 8, looking for as much as 14 on Orcadian. Moving along to the last few. First one is Pantheon, which I described as one of the setups of the year, and the shares have celebrated that with a break through the 200-day moving average and also hitting that initial target we had at 32 pence. Above 32 pence and the 200-day line, looking for the shares to fill that gap up to 50 pence. Hopefully by the end of next month or even sooner. The unfilled gap to the upside after this sideways shuffle along the 50-day line were the clues to a potential move higher, as was the bullish divergence. So all the big ticks there in place for Pantheon. On to Sarabi, which might be helped by the rise in or the rebound in the gold price. Here we've broken out a falling wedge at 24 pence. Above 24, we're looking for 30 pence initially by the end of next month at the top of a broadening triangle from back in April. We've also got a bullish divergence line as well, and a gap fill rebound to start the rally from the beginning of the week. On to Space and People, which I thought I'd cover, even though it's not exactly the most followed stock. But here an interesting setup. We've got a wide rising trend channel there from 2019, the good old pre-pandemic days, and the top of that channel heading towards £1.70. Maybe that's an end-of-year target for people looking for the shares to remain above a 2022 resistance line at 85. So above 85, looking for £1.70 on Space and People. Although I'm probably wary of what the spread may be on those shares at the moment. On to Trellis, which has delivered on that sideways shuffle that it had at the turn of the month, and a further one last week. We've broken through the 200-day line at 7.3 pence. Above that, looking for 13 or 14 pence by the end of next month in a vertical move there after the bear trap turnaround and backed by bullish divergence. Finishing off with Trustpilot. And here you can see that we've had a bear trap gap reversal to start the rally. There was bullish divergence there as well, which might be worth just adding in that little line there at the beginning of July. Since then, a sideways shuffle along a rising 50-day line, and then the breakout through the 200-day line at 90, and neckline resistance now at 95. Proper clearance of the 95 pence level this week could take us up to £1.25 as soon as the end of next month. But that bear trap gap reversal, inverted head and shoulders as well since March. Everything going on there in a positive way at Trustpilot. That's it from me today. More updates tomorrow.